The TSX hit a record close yesterday. It's already pushed past that figure today. Here to discuss is Bob Thompson, Senior Portfolio Manager at Raymond James. Thanks for joining us today.
See you again, Marilla.
So the TSX at all-time highs. The U.S. trading has been mixed from yesterday to today. Do markets outside of the U.S. look more attractive to you at this time?
Yeah, we're going to stick with that theme that we've been talking about for a year, that there's a big capital rotation happening right now. And what that means is that, people have been racing to get into chasing the U.S. index, getting market weight in all the big stocks like NVIDIA and things like that. Now that they're all there, money's starting to flow out. All it has to do is flow out a little bit to these other places, and you start to see better performance. So we're sticking with the theme that the TSX is going to continue to do better than the S&P over the next few years, and also international markets.
I was going to say, are you looking outside of North America at all?
Yeah, definitely. I mean, Marilla, you know what the secret to happiness is? It's low expectations. So people have very, very low expectations of Europe, of Canada, of other places. People have very high expectations of U.S. stocks. And once you disappoint on those expectations, things tend to crater. Now, I'm not saying that's going to happen in the very near future, but once money starts to flow into areas where people say, hey, wow, expectations are so low here, it couldn't get any worse. It doesn't have to get any better. It just doesn't have to get any worse, and stocks start to do well. So that was kind of our thesis on the TSX. And if you look at international markets, it's starting to play out too.
Let's take a look at some of the sectors you like, because when we talk about a bullish market, you actually look at sectors specifically that you find bullish. What are they, other than tech? Sure.
And I'm not bullish on tech at all over the medium term. And the reason is because the expectations are so high. And that's going to disappoint at some point. But, we've been talking about commodity trade for a year or so here, and gold's always the first out of the gate. Everybody's kind of forgetting the S&P in Canadian dollars is up marginally this year in Canadian dollars, whereas gold stocks are up 50%. Nobody seems to be paying a lot of attention to it. But the money's starting to flow in. Companies like Agnico, Newmont, Kinross all beat expectations pretty significantly in the last week or two, and we're starting to see money flow into that sector. All it takes is a little bit. I mean, if 10% of the money came out of NVIDIA, 10% of just NVIDIA, and went into the commodity sector, the sector can't even take it. The returns would be enormous. So it's it's starting to drip. Money's starting to drip into the commodity sector. And when you look at the valuations here, we're back to where we were in the 60s. We're back to where we were in 2000 when you look at commodities versus the Dow.
Okay, so what don't you like right now? You like gold. We've talked a lot about gold at the start of the year as it was doing that run. But what are the sectors you are shrugging off?
Yeah, we don't really like financials that much. I mean, there's a lot of pressures. We tend to think inflation's gonna come back a bit, and interest rates are gonna stay frustratingly high, and that's not great for financials. Real estate in Canada here is an issue. I think that's going to continue to be an issue, even if we don't have a big drop. We might have a lost decade there, and because of that, the margins get shrunk on the financials. That's in the U.S. and in Canada. Now, the good thing is here in Canada, 30% of the index is energy and materials, and the banks lend to those companies and they finance them and things like that. So that might help them. But I think as far as expectations versus value, they're fully valued right now. So we're not really negative. We're just kind of neutral.
Got it. Okay, we are in the middle of earnings season. I'm wondering what has stood out for you so far.
Well, what stood out was the gold stocks. I don't think anybody's expecting the results that we saw there. I mean, when you have 100%, if you have costs at 1,500 and gold's at 3,000, I mean, that's an extraordinary return, and that's they're going to start to increase dividends. They're going to start to do M&A. They're going to be buying other companies, and we look at something called the mining clock, which tells us where we are in the sector, and we're still relatively early on. If 12 o'clock's the high, we're still early on, about 5 o'clock, 6 o'clock in the sector. So, and nobody's really overweight that sector. Nobody's even really market weight that sector, right? I mean, the gold stocks are 10% of the index. The average fund manager might have 2 or 3%, if that. So that's what really stood out. Shopify came out with some great earnings, obviously, better than expectations. But again, now they're going to have to exceed the increased expectations next quarter. And sooner or later, that's a losing game for the growth stocks.
Let me ask you about trade, because we do not have an agreement yet with Washington. We do have high tariff rates on certain sectors like steel and aluminum, some vehicles as well. What's your feeling on whether we're going to come to an agreement and whether it'll change either that 35% base tariff or some of the sectoral tariffs we're seeing?
Yeah, I mean, things tend to change every 30 seconds, right? But I think stepping out, we're going to have a deal. There's going to be some pain and suffering in obviously various sectors because of that. But I think stepping out and looking out over the next few years, globalization is dead, right? Whether people are doing deals or not with countries, there's a lot of animosity even when people are doing deals, and they're going to bring their money home. They're going to set up side deals with other people. And what does all of that cause? Increased inflation. So we're in the camp that all of this deglobalization is going to cause increased inflation over the next few years, which is going to obviously help things that protect you against inflation in the market. So, whether a deal gets done or not, there's a lot of animosity here, and people are kind of retrenching back home.
Yeah, so that whatever happens, those bad feelings will carry on for some time.